Hey, it's Mike Hambright with FlipNerd.com. Welcome back for another exciting VIP interview where I interview successful real estate investing experts and entrepreneurs in our industry to help you learn and grow. Today, I'm joined by David Tilney. Actually, several former guests I've had on the show recommended David, and he's got some great knowledge to share with us. He's an expert property manager that teaches others how to manage rental properties in a hassle-free way, and as he has kind of told me already, it's going to be some innovative ways and some things that may sound unusual to you, but the results don't lie. It works great for him. So David is one of the premier teachers on how to properly manage properties, and today he's going to share his vast knowledge with us, albeit just a little bit of it. We're also going to talk about a really interesting kind of concept that David also uses. It's not really a concept for him, called master leasing, which you want to hear. So before we get started today, though, let's take a moment to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Hey, David, welcome to the show.
Hi, Mike. Thanks for having me.
Yeah, so good to meet you. People hear me say this all the time, but we rely very heavily on previous guests for future guests because we have to keep raising the bar and improving the quality, and we've just found that from guests we've had on the show, they kind of know what it's all about, and they tend to bring us the best guests, and you happen to be one of those individuals that several different people have recommended, so I'm happy that you're here today.
Well, I hope I can give you some information that's helpful to your listeners.
Oh, I'm sure you will. I'm sure you will. So I know for those that don't know you, and I know you've done some seminars, you've taught a lot of people over the years. Why don't you kind of tell us, maybe go back and how you even got started in real estate investing, and then we'll kind of dive into some of the ways that you operate that are really intriguing.
Well, way back when, I came from a background that said, don't buy real estate, it's not liquid. So that's where I started. And I kind of, I was pushed, pulled, and dragged into buying my first house by a good friend of mine that I worked with. After buying our first house, we bought a second, a third, a fourplex, and we hired several different managers to run our properties. And the problem was we found none of them had the attention to detail and follow through that we required to make them work correctly. Yeah. So it was either get the heck out of the business or learn how to do it right. And we started managing properties back in 1978. My last eviction was in 1981. I'm one of these very, very strange people that really do enjoy property management. I quite honestly, I find it's a lazy man's game. I find it's it doesn't take too many moving parts, and it's just a fun way to make a living.
Yeah, that sounds counterintuitive to what everybody else thinks, I think, or a lot of people think. So I want to clarify, you haven't evicted, I was trying to do the math here, you haven't evicted a tenant in 34 years, does that sound right?
Well, if that's what the math is, I've actually only evicted one tenant in my career, and it happened to be a urologist out of a higher-end house, and it wasn't for non-payment of rent. He was just wasting the asset. And, the night we threw him in the street, his kids were on the roof ripping off shake shingles, and, we'll swat flies with a sledgehammer if in that kind of a situation, and we did. But I determined that going to court was not fun, it wasn't productive, and I didn't want to do it again. And so we really tightened up our procedures and haven't, knock on wood, have never had to do it since.
Yeah, that's incredible. So do you only manage your own properties, or do you manage for others as well?
I managed for others starting in 91, in 81, and I stopped in 2006, October 1st of 2006, we canceled every agency relationship we had, and we turned around and leased the properties we used to manage for owners. And we found that was a much better situation for the owners and much better situation for us. And the difference really is I was no longer their agent. I was now a principal in the situation. I rented, or my company rented their properties and then turned around and subleased them to the occupants. And that was a good thing. One of the things that people don't realize when they hire a manager, there's just one example, is that if the manager gets hit, let's say, with a fair housing complaint, through the laws of vicarious liability, that complaint goes right through to the owner and he's personally liable. So by separating the rental, the owner renting to my company and then me renting to the occupant, that further insulated the owner from that kind of a situation. Of course, there's many other benefits to both parties in doing it that way, but so since October 1st of 2006, we have not managed for anyone else, but we have run a few more than 100 properties since that time.
I see. And so this is what you refer to as master leasing?
It is.
Yeah. Well, maybe take a few more minutes and kind of tell us maybe an example of how that works and how it benefits, or kind of the pros and cons to all the parties involved.
Well, master leasing, the nice thing is it's not one size fits all. You see what the owner's needs are, give them what they need, and take everything else. And so you can do it on a performance basis. It says, I'll pay you a percentage of what I get if and when I get it, which a little bit looks like a management agreement in reverse. For the sake of discussion, and these are never the percentages that we would use, but just for the sake of discussion, if a management fee would be, let's say, 10%, we might lease it for 90% of collected rents. So the net to the owner would be largely the same.
Okay.
But it doesn't have to be a performance lease. It can be a fixed lease. I could guarantee to pay the rent, whether it's vacant or full. I could take care of all the expenses up to a stop loss. And anything in between there. All of those things work.
Yeah. There's
tremendous benefits to all parties. Master leasing is something that's gone on in the commercial side of the business for years and years.
Yeah. So talk a little bit about, like, who, I guess you can, whatever you decide happens, but who typically is responsible for vacancy and certainly maintenance, make-ready type stuff?
Again, it totally depends on the owner's needs. If an owner is really strapped and they need every dime out of the property, I can really show them that a performance lease works better for them because we're very good at keeping the place full. We really view our tenants as employees. We think the biggest thing we've done is hire a tenant to do a job. And the primary job is to maintain and improve the house and grounds. Secondary job is to pay the rent on time. But if they don't want to do that, they shouldn't rent from us because we're too tough.
Right.
Thirdly, we want them to get along with the neighbors. Fourthly, we want them to stay at least for their lifetime and hopefully their kids' lifetime. And usually we get a little chuckle about that.
Yeah.
And lastly, we want them to leave us alone. With that kind of an approach, the owners will probably net more if we do a performance lease. However, some owners are very adverse to risk, and those kinds of folks will guarantee to take care of all the expenses up to some stop loss, and we'll take care of all the vacancies. And it's very easy to figure out if you know your business and you know your expertise. You start at market rents, and then you figure out, well, how much would management be, vacancy be, maintenance be, and then you take off one more thing, and that other thing you have to take off is profit. Because if you're willing to take on the risk of some of these guarantees, you should earn more than under a traditional situation.
Right.
And it can be very, very profitable.
So you're saying you effectively take those expenses off of the rent, so effectively somebody could rent cheaper if they take care of the house and plan to stay there for a long time. Is that?
Yeah, you'll actually make a heck of a lot more.
Yeah.
Typically,
vacancy and make ready turnover stuff kills my business. I mean, that if there's anything, that's what it is. We totally rehab a house and it's like brand new, and you get a tenant for 4 months and they do $7,000 of damage, and you have to take 2 months to evict them. I mean, that doesn't happen in every house, but it happens almost every few months to me. So.
Well, and I would say, whose fault is that? I'd say you hired the wrong employee. You hired the wrong guy and put him in the house.
Yeah.
And you've got to change your systems and clean that up, because that will make you either cause you to get the heck out of the business or cause you to go broke.
Yeah.
I had a guy from Ohio who contacted me some time ago and said, we can't keep people in the house more than 6 months. And every time they move out, it's a $6,000 nut to crack to put the house back to normal. Doesn't make sense. Under our system, right now I'm in Naples, Florida. Our houses are all in Colorado Springs. We have a tenant moving the end of March. I anticipate that tenant occupancy on April 1st, I will have a new paying tenant in there. I will not lose a day of rent. Rarely do we ever have any downtime unless we're taking on a new property. We'll go from a tenant to a tenant with no downtime. But why is that? We've got the systems in place. We've got the tenants on our team. They know what their job description is, and they do a great job, and we screen like heck to put people with the right attitude in our properties right up front.
So maybe can you share some tips on that? Because I think, one of the challenges a lot of people face is, they do the traditional stuff. They check a credit score. Do you have is your income 3 times rent or more? And it kind of stops there. I mean, if they get a bad feeling about somebody, they usually don't put them in. But, I think that the general common belief is a lot of tenants they don't treat the house as if it was their own. They tend to be more transient and things like that. I mean, what you're doing sounds very counterintuitive to that kind of line of thinking.
Well, I think it is. I mean, so much of this is different. First of all, our longest tenant was with us for 24 years and 10 months.
Wow.
And the only reason they left is they went into the hospital. We had another tenant with us for 18 years. We really do screen for long-term occupancy. And there are plenty of people that want long-term occupancies. What most landlords can't tell tenants is, they can't look them in the eye and say, gee, you can move in, put in the vegetable garden, hang pictures on the wall, do whatever it takes to make it your home and enjoy the place. Most tenants are concerned when they move in, for sale sign is going to go up on the front yard, and they're not going to have that stability. If you can give them that stability, you got to say, what do tenants want? Give them what they want. Now think about it for a second. Most landlords usually start with a lease that goes from a period of time to a period of time.
Right.
And at the end of the lease, what typically happens? For most landlords, would you say?
They wait for it to go vacant, and they go in and fix it up, and they have to lease it.
I'm saying if the tenant remains there at the end of the lease, what happens at that point?
I think it's typical that they would either go month to month, or they would try to get them to re-sign a lease.
And I would say that most people do go month to month. You're right. I think most landlords, the leases you see at the end of the time period, it says if nothing else changes, this becomes a month-to-month tenancy.
Right.
Well, I don't think any of that makes any sense. I think the first year you do business with tenants, it ought to be a month-to-month tenancy because they're untried, untested. You don't know if you're going to want to jerk their chain and end it. Once they're tried and tested, then you probably want to lease. For me, in my market, the best times for my property to come available are the last day of June and the last day of July of some year. Why is that? That's because kids are out of school. There's no snow on the ground. And in Colorado, that's when you can get the most people looking and get the highest rents.
Right.
So if you have a month-to-month tenancy, and after the first year, then they move out November 30th, that's not a very good time. There is snow on the ground. There are kids in school. You can have multiple months vacancy. It doesn't make a lot of sense.
Yeah.
Plus, if all of your properties come available at the same time, that means you have to analyze the market about once a year. We analyze the market in May to determine what are the market rents for our properties, and then how do we scale our tenant that we're looking at on a scale of most desirable to less desirable tenants. And we'll set their rent for the next year based on what we determine.
Yeah.
If we want them to move, we'll raise the rent through the roof, apologize like crazy, say we sure hope you're not going to move, but wish you the best wherever you go if you do move. If they stay, they then are paying for their sins because they're paying way above market rent. There's a lot of things that people don't really think about. Screening is absolutely crucial. To me, the credit score is number one. It's more important than anything else. When you talk about 3 times rent in income, we have found there's 3 things we look at on screening. One is credit, and to me that's number one. That's the first thing I look at. Another is employment and income. Obviously, it doesn't help anyone to get them in, get them overextended. We want them to have plenty of money to be able to enjoy life. And lastly, we want to make sure that there's no problems with present and past landlords. And we'll look at all three together. Our basic rule of thumb says, unless we can verify 2 out of those 3 things positively, we're going to pass. But think about it for a second. You've got some people that make lots of income, but they're not very good stewards of their assets. And so they may have plenty of income, but they got too darn many expenses.
Right.
So the 3 times income, to have a firm, exact rule on that, that may not work for us. What I much prefer is folks with a 775 credit score. They may not have quite the income, but if they've had the history of renting in the same price range, and they have the stability that they stay where they are for extended periods of time, that meets my needs a heck of a lot better.
Sure.
And landlords, most people check present and past landlord. We check the last 4 years rental history. You got to go back far enough. We check the last 4 years employment history. On our application, we ask things like personal skills, plumbing, roofing, appliance repair. We ask tools you own. We want to know what tools they own. We think that to live in a house demands owning tools, and if you don't own them, then we want you to know right up front that you're going to pay the nice man who does own the tools to solve the problems. We do put responsibility on our tenants to maintain and improve the house and grounds. That really is number one.
Yeah, that's interesting.
And we really share those expectations. And by sharing them, you can't get people to do what you want unless you tell them what you want them to do in the first place.
Yeah.
And most landlords think, boy, there's a great business if I didn't have to deal with tenants. Well, I mean, that doesn't make a lot of sense. I really enjoy dealing with my tenants. Our rich dad, poor dad, he talked about assets and liabilities. And I'll ask people all the time, I'll say, well, tell me about your assets. Well, I got all these houses. They're great assets. They're not assets. Think about it for a second. If you have houses and they're vacant, do they feed you or do they eat you? They eat you. And you talk about turnover and you talk about doing the rehabs at turnover. That doesn't feed you, that eats you. What are your assets? Your assets are your tenants. And too many landlords don't understand that their assets are their tenants. And so, I wrote an article a number of years ago. I had a friend that owned owned a bank. And I still do business with this bank. It's now been bought out, so it's owned by a bigger bank. But the value in his bank, in my opinion, were his employees. He had the same employees there for 20 or 30 years. And my article, what I said in the article is that, his biggest asset are his employees. And every night they go home, and his job is to get them to come back into work the next day. I think the same thing's true with tenants.
Yeah.
Your job is to motivate your tenants to, number one, do what you want them to do and be happy in the process, and number two, to stay in your properties long term. Does that make sense?
Yeah, so talk a little bit about how do you motivate tenants and how you get them to stay for a long period of time, because I think you're right. I think the typical person, I mean, I don't manage my own properties, and I don't know a single tenant's name. I'll be really frank right now. I don't want to know any other names. I just don't want to deal with that. I look at it the exact opposite way that you probably do, although what you're saying is very intriguing. But how do you get people to want to stay for a long period of time, and how do you motivate them without having to be a counselor 24/7?
Well, the first thing I'd say is you ask on your applications how long people want to rent the property for. That's number one. That's basic. Now, whether that works or not, I've seen situations where people move in this week and next week they have a marital problem and they need out.
Right.
So that doesn't always work because the world's not a perfect place. But you got to start there. You got to start someplace.
Right.
And you got to look at their history. How much turnover have they had in the last 3 or 4 years? Very, very important.
Sure.
That really counts for us. Motivating them. Well, first of all, we have a whole bunch of hoops that applicants have to go through before they have the opportunity of signing a rental contract with us. That's number one. When they get to the rental contract, that really is the final sieve in our screening process. That's set up to do two things. Number one, if they got through everything else and they seemed right, they looked right, smelled right, tasted right, but they aren't right, that should wash them out. But number two, we believe that that is a training session, and that training session is set up to share the expectations and train the tenants as to what we do expect from them and what they can expect from us. That takes a while. That may take me an hour and a half to 2 hours, just depending on the situation. But if I do that right, I bought myself an annuity from then on out.
Yeah.
How do we motivate them to do things? First of all, people like to be treated like adults. And we essentially pat them on the head and say, when we first call them up to offer them the property, I'll usually say something like, well, is this your first choice? And they'll say, yeah, we want it. And I'll say, well, you've risen to the top, and we think you're the right guy for this property. And from our standpoint, nothing ever counts until contracts are signed and money changes hands. When can we get together? So we'll set, and so we won't take it off the market, and I'll tell them, we're going to keep showing it. We're going to keep taking applications. We're not going to tell anyone it's rented until we have a contract signed and money has changed hands. So when can we get together? How about this afternoon? We'll get together and we'll go through the rental contract, and they'll find our rental contract's very, very unusual document. It does give them the responsibility. And what we say is that, most property managers say, here's a contract, sign here, press hard, last copy's yours, read it later if you want, move into the house, face the wall, don't touch anything, and if you do anything wrong, here's how we're going to beat you up. And our approach is very, very different. Our approach says, now, here's the house, we want you to make it a home. And as long as you're enjoying it and improving it, we're on the same team. But we don't want you to do something that's going to hurt yourself, hurt someone else, or hurt the property. So if you got any great big ideas as to something to improve the property, make sure you run it by us first so that it doesn't come back to either haunt me or haunt you.
Yeah.
And I can give you some dramatic examples. I mean, we had a tenant who did a 350 square foot addition on a house for us one time. The addition included an Olympic sports-sized master bath with tub, shower, double sink, skylight, wood parquet flooring, oak trim, and all the frills. He built the cabinets himself. And then he also changed the master bedroom. This house, if you can visualize it, it had a chicken coop roof, meaning it slanted from one side to the other.
Yeah.
And it was low on one side, and previous owners had put a peaked roof on top. So where he wanted the master bedroom, he got all the building permits, did everything correct, cut through the first roof, made a master bedroom 13 by 15, 9.5 foot ceiling, 2 beams across it, and a big bay window. Now, we paid for the materials, but we didn't pay a dime for labor. And hopefully, you can see the benefits to both parties. First of all, he got to test his skills and abilities using our capital, which was a major benefit to him. Most tenants, don't like the fact that they say, you can't touch anything. Move in here and it's not your home.
Right.
We want it to be their home.
Sure.
It's very important. If we don't want people, quote unquote, camping out in our properties. That's the wrong kind of person to do business with.
Right.
We need people who will internalize and take our properties and turn them into their homes.
Yeah.
And if we've got the right properties and we're on the team and they do some things to it, it's very difficult for them to move once they've internalized and made it their homes.
Sure. But David, maybe you could share a couple of thoughts. So we've had a property manager that we had, many years back, had the same kind of approach. Paint however you want, do different things. The problem is that sometimes we'd get these houses back and they would be, we'd have to, they'd be purple or, other things. We've had some issues with people kind of making it their own, but that would cause an expense or burden on us to deal with it because the next person's not going to like what they did. Talk a little bit about that dynamic.
Well, I mean, first of all, you got to make sure they got the right skill set.
Yeah.
And we don't let everyone do a 350 square foot addition.
Sure.
we knew what this guy's skill set was. We knew this guy before he rented the house, and so it worked out fine. When he moved out, we moved someone in the property, did not lose a day's rent, and raised the rent $330 a month. So, that was, not everyone does that kind of thing for us. In terms of paint, everyone thinks they can paint, but not everyone can paint.
Right.
And in terms of colors, we've told everyone for years and years that, if you ever want to paint or you got to fix up something that needs some paint, we'll supply the paint, we'll supply top of the line paint. and you can paint it any color you want as long as it's antique white, low luster. Now, we're changing that. It's changing a little bit because antique white, low luster is maybe not the right thing, but we want that control.
Right.
And you know, we won't do wallpaper and those kinds of things. We've occasionally done a border, but I'll tell people, you know, you're not tried and tested. You need to be with us a couple of years, and we need to see what you can or can't do. We need to see the yard and some of these other things. And down the road, ask me again, but it's not appropriate at this point in time.
Yeah. Yeah, that's interesting. So talk a little bit about how you get people to stay for, I mean, all of these people you're talking about that you're saying if they make it their home, they have a tendency to stay for longer periods of time. But are you still doing annual leases and renewals, or are you doing longer term leases?
Every one of my contracts is a month-to-month rental contract. Every single one. The one that was there for 24 years and 10 months was a month-to-month. Because my approach is, which, as a landlord, which is better, a long-term lease or a month-to-month rental contract? I honestly believe that if a tenant wants to move, they'll move first and ask questions second. And a long-term lease may just be a very unpleasant situation for a landlord that can't end it. Whereas a month-to-month contract gives me the ability to jerk someone's chain if I need to.
Yeah.
But I don't have to. You know, if you set it up right, I haven't. I mean, as I told you, the last eviction I did was in 1981. In terms of getting people to stay, think about this for a second. But my ideal house is probably a 3 or 4 bedroom, 2.5 bath house with a 2-car garage. And it has a garage door opener. Well, the first thing, and there's just a picture for you to think about. The first thing you want to think about is you want to go into the garage and hang a big sign on the garage door opener saying, danger, high voltage, do not use. Why is that? You want them to accumulate stuff. The more stuff they accumulate, the tougher it is for them to move. You don't want them to park their cars in there. If they park their cars in there, you know, the toughest tenant to get to renew is the yearling tenant.
Yeah.
Because they haven't accumulated enough stuff. So what do we do to get that yearling tenant to maybe stay the second year, which once you get them 2 years, I deem you've got them, unless a couple things happen. Unless they move to buy a house, unless they have another child and the house they've got isn't big enough, or if you've got a house that does not have a separate bathroom off the master bedroom, they can't stand having a fight with the kids to get ready for work in the morning. There are a few things like that. So you got to have the right house, got to have good locations. But those are really the issues you're dealing with. But what do? We sell all of our occupants on day one when they move in what we call a rent lock. It's really a first right of refusal option to renew the contract at the end of the initial period with a guarantee that if they've done everything they're supposed to do right and the property is available for rent, we guarantee that the gross rents won't go up more than 10%. Doesn't mean they will go up 10%. It just means that if the market goes crazy and rents go through the roof, we're going to treat them differently than we treat John Q. Public walking in off the street.
Yeah.
And what we've really done is we've told them day one that rents will go up, because that's very important. You have a very good tenant the first year, and they get done at the end of the first year, and you raise the rents, and they say, who do you think you are? I was a terrific tenant.
Right.
And so then they say, I'm out of here, I'm leaving. And they don't realize that they're leaving from your house, moving into another house that the landlord just raised the rents. They just didn't know it because it was vacant. So that's the first thing. The second thing is that when you send out a rent renewal, they're saying, gee, we paid for this consumer benefit. If we don't use it, we lose it. And so it might be one more way of roping them into the second year. But our whole attitude is different. Since we essentially give them more latitude about how to make some decisions about how to maintain their house and grounds, and treat them with a lot more respect than most management firms do. With that in mind, it's really hard to kind of throw us away and leave us, and if they're just going to another manager who's an unknown, untried commodity.
Right.
We really do like our tenants. We really do show them respect. They really are my assets, and I understand that.
Yeah. David, I wish we could have like a 4-part series here. I know we could talk about this stuff all day. This is good stuff. We're running out of time here in just a few minutes. I was hoping you could share a couple more things with us. One is talk about how you collect rent, because I know that you have a process down where you're not chasing people for rent, and you get the rent collected quickly. Maybe share some insights on that.
Yeah, well, I collect all my rents in 5 minutes a month. I use ACH, Automatic Clearinghouse. Tenants don't send it to me. I go into their bank accounts and take it. If they owe me more, I take more. If they owe me less, I take less. They sign a little form with me when they move into my properties, much like when you move into a hotel that says I agree to pay for all charges I owe. That's the only thing I get. They give me their routing number and their checking account number, and that's all. I don't show that form to anyone unless they try to dishonor an ACH pull that I would make. Never happened to me yet.
Yeah.
I've never had a problem. I have had a bounced ACH when the tenants don't have the money there, but it's so much faster. You know, we collect all our rents before the first of the month every month. They're due on or before they're due on the last business day of the month, and they come out of their bank account early in the morning. So if they bounce on me with an ACH, I know it very quickly,
right.
Normally the same day. And normally if a tenant is going to be light, not have the funds, they've communicated with me upfront in advance, because it's going to cost them substantially if it's not there. And it's not that I want to get rich on late fees. I don't have more than one late rent probably in a 12 to 18 month period a year.
That's incredible.
So it's a very efficient way to do business.
Yeah.
Now, I did say that we ran over 100 houses, and we did. I will say that since we moved to Florida, and we moved here January 2002, my numbers are substantially smaller because we've been here a long time, and I haven't been building my business, and people have died off and situations have changed, and so some of my master leases have gone away, but we still run all of our properties that way, and we do still have some master leases.
Yeah, that's great. That's great. Well, David, thanks so much for your time today. I definitely appreciate your insights. I know you have a number of seminars and things around the country during the year. Can you tell folks where they should go if they want to learn more about you and maybe learn more about some of your teaching opportunities?
Yeah, we do maintain a website. It's just my name. So it's David Tilney, and Tilney is T as in Thomas, I-L, N as in Nancy, EY.com. So you can always go to davidtilney.com. We're not always current on our next seminars that we're doing. I think this is the 24th year we've done them.
Wow.
And this year in 2015, we are doing one that the only one we have totally set up at this point is in Costa Mesa, California in September. I think it's the 18th, 19th, and 20th. We do a 2-day hassle-free property management, and then we do a 1-day master leasing. I don't let anyone take the master leasing unless they've first taken the other, because you got to know how to manage before you take on someone else's property. If you don't manage correctly, you'll get in a lot of trouble.
Yeah.
And you'll get other people in trouble.
Sure. Well, David, thanks so much. We'll add the link for your site down below for anybody that didn't get that written down quickly enough. But definitely, appreciate your time. And I think we may have to have you back for round 2 at some point. I know you've got a lot of great information to share, and I appreciate you sharing some of it with us here today.
That'd be great. Thanks, Mike. I enjoyed being here.
All right, David. Have a great day. Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry, so get on over to FlipNerd.com.